Raiders, Nick Shaheen here, looking at pot stock, Canopy growth. Okay, so this is like the chief stock, I guess, the one that has the most weight in the media. At least it did. Last year we couldn't have enough of them. This year their luster has been stolen, probably because we had a ton of IPOs, high-profile IPOs. Beyond Meat, Uber, Lyft, all of these guys. Last year we had nothing going. So here they are, a lot lower than a lot lower than the highs they had, and they're setting lower highs. So if you look at the chart, you think, oh my gosh, I need to throw that out. Maybe. So let's start with the fundamentals. The thesis. Okay, so pot is popular. There is no doubt about it. Everybody I talk to is crazy about it in any form. CBD, drinking, smoking, eating, medicinal. Everybody that uses it loves it, and everybody that doesn't use it wish they could. And the problem is that it's still a gray market and a black market that's still competitive. So the companies that do it legitimately are at a disadvantage, but there is a long-term thesis developing there. Almost every legitimate company wants to be in it. I have no doubt in my mind that if given the chance, Pepsi and Coke would like to offer a CBD-infused drink of sorts. Maybe Nabisco would have a snack off the shelf in the supermarket that has pot in it. I don't know where it's going to go. All I know, maybe some cream from L'Oreal with some CBD in it that heals everything. Whether you believe in it or not, doesn't matter. Is there a market for it? I have no doubt in my mind that people will buy it if you offer it. So what now? The fundamentals as they are right now are nuts as far as valuation. But who cares about valuations? The thesis is not about what they're worth now. It's what they can, so minus $2 per earnings per share and 65, 66 times sales. The price to sales. So clearly insanely expensive, but who cares? That's not the thesis. The thesis is they develop the growth. Will they get bought out? Will big companies come in? Probably when the U.S. makes it no longer a federal crime to actually deal with pot. A lot of states are coming in line with California and other states. So the trend will become so wide that the government will say, you know what, we can't just fight all the states. We have to do like Canada and make it not illegal to do pot. Then Pepsi would be unshackled to actually look at it. Just an example, banks like Bank of America now cannot do business because it's, the money goes across states and it's federally a crime. So the fundamentals are there. The demand is there. So the hiccups are throughput, how much they can deliver. And eventually they will be able to fill the market. They'll get their operations in line in order to deliver on the promises. So let's talk about charts. Anytime I see a chart this tight, what does that mean? If I draw a line, lower highs, what's going to happen? They're going to hit a level of sorts and do something. Okay, don't look at that for now. And then I see little tiny line here going up, but more importantly, maybe a longer line down here. So let's do it this way. I don't know what's to the left yet. We'll expand it later. So you can see that the range is tightening. It's gone from this down to a pinpoint. Usually when they get to a pinpoint, something's got to give. There's another smaller pinpoint right here, something's got to give. Something's going to happen. And look what's coming up. Earnings. Perfect. This is a short-term trigger. The reaction is a complete coin flip. I have no idea what they're going to say. I have no idea how the market is going to react to it. So I think they had some sort of a change in management or whatever. So do your homework on the fundamentals from that perspective. But the reaction here is a coin flip. Your guess is as good as mine, as good as somebody else, as good as all the experts out there. So what can I discern from the chart itself? This is a daily chart. I can tell you something is going to happen in the next couple of weeks. And let's see if we can look at, is this a good time to go long? So if it loses this level, they're going to retest the low that was back here in the Christmas crash. We're not that far off from it. So a lot of the froth has been shaken out a couple of times, here and here. So from here, they're going to have to cut meat, You know, there's not a lot of fat left on this bone. So what if I go, let me see here. Let me go to a weekly chart. So Canopy growth, again, weekly chart. So every candle here, every candle is 1 week. So you can see same region. This is December crash. This is whatever crashed before it. And look how much of a floor this was. So if I were to look at meaningful zones, gosh, my computer is running slow. Sorry about that. I'd say this is the December crash where world ended, right? We survived. We came back to it almost. This is whatever happened. So that's 2 of them. It was a meaningful level before and the time before that. So clearly this is an area of importance. Where they are right now is also an area of importance because look how many times they tried to bust through it. This is important right here. And look at this one. This was a really good effort that failed. And then right here, boom, they busted right through it. They came back to it. They tried to hold it. They overshot lower. But most of this is because of market wide. I bet you if the market wasn't falling, it would probably stopped right here. That's my guess. I can't prove it. But here we are. Right there. With an event. So if I'm long the shares, and I want to stay long for the long term, I'll probably buy puts to protect myself over the short term. They'll be relatively cheap. If I have thousands, why wouldn't I spend 100 or 2 to protect myself on the downside? And I could just protect the colossal debacle. If I'm okay down to 24, I don't need to buy puts higher than 24. It all depends on the personal preference. So I'm not calling which way this thing is going to go. I'm saying that it's tight and a move is coming. The direction is still TBD because TBD, to be determined because of an event. It's a coin flip. I have no clue what they're going to do or how they're going to react to it. So from a trading perspective, if I haven't closed my longs, this is not the place I leave my longs. And if I wanted to nibble long, this would be the place I would nibble long. How would I do it? I would either buy the shares, pretty expensive, $31, or buy calls or call spreads. They're probably heated for the short term, so I would go out to December. Or even longer, maybe leaps for next year. There'll be a fraction of the cost of the whole share, but I'm still long term. This way, I'm not so worried about one tick, one day on the open the day after the earnings. Or I can sell puts or put spreads. Now, those are hot. It's a violent stock, so they'll probably have some restrictions on it. So I better know what I'm doing. What does that mean? If I sell a $20 put in CGC, I better be ready to own it at $20. So if it falls to 15, I'm buying somebody's share. It's the same as you and me talking and you telling me you're nervous about your shares. I'll say, you know what? I'll buy them off your hands at 20 if they fall to 19. You would pay me a premium for that because I committed to protecting you. I'm selling you insurance at 20. And if it's $1, I'm making up these numbers. If it's $1, then my break-even point is 19. Anything below 19, the losses are on me. You're off the hook. You're protected at 20. So if it falls to 18, I have to buy them at 20 from you. I lost $1 per share. Big deal. Meanwhile, the stock fell 40% from current levels. So that's how selling puts works. When I sell a put, I'm acting as a market maker where I'm selling somebody insurance. Period. That's the easy way of saying it. Or I'm selling somebody a lottery ticket, hopefully a losing one, because I don't want it to go there. Ideally for me, I don't even need a rally. It can fall 40%, 35%, and I'm still good. All I need is CGC to close above 20 by the time my expiration goes away. When is that expiration? They have all kinds. They have some that expire next week, some that expire next month, some that expire next year. I pick my level, I pick my time frame, and I'm good to go. Bottom line of this video is, I don't care what the stock is. So develop your fundamental perspective on it. And then I look at the chart and I see levels. This is clearly a level, 25, 26. Where it's at is clearly a level. You can pick other levels, depends on the time frame. This is clearly a ledge. So if I go back to the daily, I'd say that, own it. Clearly, the sellers are in charge, and this doesn't change until they break through the descending trend line. So I would have to see it at 36 or higher, but this is a moving target. To me, 36 or higher, then the buyers may get back in line as far as being in control to a degree. Until then, I have to be realistic with the charts and what's going on around it. Nick signing out. If you have any questions, you know where to reach me.